Oh, imagine being 21 years old, facing $300,000 in debt, the loss of your father, depression as you stared down the barrel of a public business failure. Mind you, you were on the front of magazine covers as the youngest American to do what you did. Most people would give up, but not Gray. In just 18 months, he created a company called Kashupay in the Fintech space that did $50 million in transaction volume. Kashupay is revolutionizing the way that entrepreneurs access capital to start their business and start their projects. But today, we're going to dive into Gray's raw, unfiltered story about grit so you too can see if you are struggling with what I call the fatal 3Ds, the death of a loved one, crippling debt, harsh depression, this too shall pass. So this is about how to move forward, keeping one foot in front of the other. And even if you are going through hell, the right move is to keep going to get through it. Stick with us because this is an episode that you don't want to miss. Let's dive right in.
You should be proud,
so you gotta have a lot of conviction.
Or you have to be a business mind.
AI is literally the solution in everything.
So just know that there will be change.
To start or scale a business, you're
munition.
Welcome back to the Founders Talk series.
So first of all, what is marketing?
To just
do it and learn.
Welcome back to the Founders Talk series, brought to you by the 5-Minute Startup, where we dive into the minds of founders building their dreams brick by brick, no fluff and no BS. In this episode, we are joined by Gray Friend, co-founder of Kashupay, a fintech startup aiming to democratize the way people access capital for their business and their projects. With a strong background in finance and a sharp eye for identifying growth opportunities, Gray has helped position Kashupay as a player in the emerging generation of financial technology. He focuses in on accessibility of funding for businesses, payments, and credit solutions, so much so that he's done 50 mil in transactions over 18 months. So get ready to dive in to a wide range of conversations about innovation, financial empowerment, and the future of technology. But before we dive in, first, I want to ask you how you're doing today.
I'm doing well. I can't complain. Beautiful Tuesday morning out here in Arizona. Loving every second of it.
Yep, and I sure love Arizona. I don't know why, but I have so many business contacts in Phoenix, in Scottsdale, MP, all over Arizona. You know, that's kind of, it's almost like for emerging markets, it's one of the almost like incubator areas, right? People think of Silicon Valley for tech, but there's a lot of tech, coming out of Arizona, and there's a lot of funds, a lot of investors and things of that nature, and a lot of people who made really good money because of the ecosystem of the different types of professionals that you have and investors that are available who work together in that region there. So awesome. I'm glad to hear things are going well for you. And what I like to do is, as quickly as possible, I want to give people an understanding of why is it worth it to stick through our conversation today and what they'll get out of it. So what would you say out of everything we're going to typically talk about in a podcast like this, about your business, about Kashupay, about your history, what would be the number one most impactful insight that someone can expect to walk away from having this conversation today with you?
Absolutely. So more so the history and the relatableness from my past to the average, maybe person who's looking to take on their dreams, especially those who went down the collegiate route and went to school and got a degree and contemplated going all in on themselves versus going what is deemed the normal way to find success. So I think there's a lot of good treats that will come from my story that can potentially resonate with a lot of people.
Yeah, absolutely. And that's the biggest thing about being a founder, being an entrepreneur. You're typically always in some form of uncharted territory. And the reality is there's all these frameworks. I had one founder on the show who said his only gripe with listening to people who've done it already is typically if they didn't do it at this exact same time, they're basically telling you about their lottery ticket that just happened to win at that time, right? And the reality is you're always building something new or doing something that really not necessarily has been exactly seen before. And so being able to navigate that is super valuable. And we look we really look forward to your story today, as I have a good understanding of your background, and it's pretty exciting through the ups and downs and your resilience specifically. When it comes to the podcast today, I define you as a phoenix. You know, not only having grit, but being able to go through the troughs and come out stronger, better, faster. And so that's what we're going to talk about today with respects to you. Now, with that being said, we're going to start segment one, where we're going to talk about the guests and their background. And the entire point of this segment is to show if he can do it, then for the audience, so can you. And so now you've gone through at least one of what I call the three fatal D's: debt, depression, or death of a close person. And so before we go into your origin story, what would you say to the entrepreneur right now who's struggling, whether they're in tens of thousands of dollars or hundreds of thousands of dollars in debt, maybe pre-revenue, but they have a real solution and a real dream that they know can impact the world and it can change people's lives? What would you say to that person at that low point about how to get from there to get to where you are today?
Absolutely. This too shall pass. You're in a position that is, a culmination of everything that you've, worked on and worked towards. And it might not be where you want to be, but it's just a matter of, trucking along and being in that consistent headspace of, we haven't even started yet. So if you're in a place where you're just launching and you're pre-revenue, pre-idea, or you're, unprofitable, be stuck in that state of, we haven't even started yet. Therefore, I'm going to continue to work on this as hard as I can to get it to the point where I feel like we have, quote unquote, started. And we're starting to put dollars on the table. We're starting to expand. We're starting to bring on a team. We're launching a product. We're shipping updates, the case may be. So this too shall pass, and being a delusional optimist per se, and just know that everything is temporary, and know that you should continue to fight for and work on what you are building, regardless of the outside circumstances. Some of those you can't control, and just focus on the control.
Yeah, absolutely. Yeah, keeping that, like we used to say in the military, one foot in front of the other, right?
Absolutely.
Showing up every day for yourself and for your business and for the people that you serve, more importantly. Because a lot of us, we're not necessarily motivated by ourselves, but we are motivated by helping others. And so that impact, a lot of times, is people's why. And so remembering to keep one foot in front of the other, that's really important. So thank you for that really wise words. Now, so tell us a little bit about yourself. You obviously have a thing for business with your level of success that you've been achieving. Where did that start? Were you involved in business? Were you like the classic, I had a lemonade stand and I scaled my lemonade stand to 10 stands in the area? Or tell us a little bit about like how you got going in business and your origin story.
I more so always had a knack for building. I'm an engineer. I graduated from Texas A&M, and ever since probably early middle school and high school, I've always had a knack for building. I was doing classes, taking care of items that would allow me to effectively work on and tinker with projects, right? So I was constantly doing something on building, and effectively that turned into business in middle school. Obviously, selling candy. In high school, I started like a clothing brand or two and sold it to, my family members, my friends, and everything like that. So always kind of had a knack for building, I should say. And that ultimately became, business. And that transferred into college when I was going through, engineering school and everything. I was working 2 jobs. I actually quit both of those jobs and saved up about $5,000 and went all in on my first e-commerce product. It turned out to be a sleep supplement brand that we scaled up on Amazon rather quickly. Trials and tribulations and, with everything. But that was kind of the first glimpse of business and being able to build something that had a measurable ROI. And as soon as I was in college, I was studying, and I could see that I could build something for myself and again have that measurable ROI. That's where the bug really bit. So really, like the past 5-6 years have just been building, and it started with e-commerce. It went into a few other projects. Ultimately, all of those failed, and that's just kind of part of it, is failing forward and being able to, know that this too shall pass. And if you are really hungry and, again, delusional optimist, and you really want to build something, then it's just a part of the game. I mean, you're going to fail more times than people have tried. And that's the thing. And being able to, sit with yourself and realize that it's, again, part of the path, then you'll always get through it, I suppose. But yeah, I've always had a knack for building. And it was like, Legos as a kid. It was robotics in middle school. It turned into business in high school. It turned into e-commerce and selling stuff on platforms in college. And then it turned into real estate endeavors after that. Both of those all failed and ultimately led to our project and financial service business that we're doing now. So it's a really unique story on how it came together.
Yeah, absolutely. And you said some key things. Number one, failing forward, right? That's one of the things that I feel like, I don't know if we blame this on Hollywood or Netflix or whoever, but it's like we culturally painted a picture that, Steve Jobs came up with this idea. Steve Jobs' idea went to $1 billion, and that's how entrepreneurship goes. Or YouTube started, even, YouTube of all things started out, and people have the perception that they put this service out and then all of a sudden it blew up, not knowing that there's been several iterations on that business. But then prior to that business, there's been several iterations for the founders where they've seen what works, what doesn't work, learning how to talk to customers and things of that nature. And for you did it at a really young age. Now, so you started out, you would say you're a classic builder, going to school for engineering, and you really had a knack for building tools and solutions and things of that nature. Does that come from seeing problems first and then trying to build a solution for that problem? Or is it more or less, I'm a tinkerer and I like to just build things and then see what they become and then pivot those things to something valuable once I kind of have a framework or a structure or something of value? Some people say MVP. I would say this is even pre-MVP, right? In a lot of cases. What's that motivation there that causes that to click for you?
Sure. Yeah. So it's kind of it's a little bit of both. I like to be a dual threat in that sense. So not only is the love for tinkering and coming up with ideas and building ideas, but more so solving what started as our own problem, solving a situation to get to where we needed to go. So funds, these couple real estate transactions that we were going to do, we needed to effectively get capital. And to get capital, 21-year-old kid, no one's going to give me a loan for squat. However, I did have a good credit score. So I worked with a couple of consultants and walked into a couple of banks, was able to get a couple of cards. And these were high limit cards. You use those to effectively turn a part of them into working capital through a not so pretty solution of invoicing ourselves, buying stuff, returning stuff, but effectively was able to take part of the cash off of the cards to put down on these properties. And that's kind of, we were solving our own problem. We needed to figure out how we could do this efficiently and effectively. And we told our story to the group of people that we were around, and they asked if we could do it for them. And then it kind of became a thing. And here we are, thousands of people later and all that jazz, building something really, really unique.
Yeah. And so you mentioned a lot of different points of value here, right? So I want to break these down a little bit. So number one, you talked about doing one of your first real estate transactions. Number one, how old were you when you did this?
I was like 21. My partner and I were the youngest franchisers in America. There's a couple articles about us. We had like this random bagel shop in Massachusetts, and we were opening up another bagel shop in Orlando, but ultimately both of those fell through, overconsumed, didn't know what we were doing. Get there to even start the project, we leveraged, ultimately this service that we doubled down on and are building now. So it's really unique how it kind of turned around and became something cool.
Yeah, so there's so much insight here to unpack. So number one, you did this at a really young age. You said you had a good credit score, but at the time, did you have much capital to your name that you were utilizing to deploy as well? Or was it all basically credit-based initially to turn that credit into liquidity to move forward on the deals?
Yeah. So, all my cash that I had previously kind of dwindled away from the previous e-commerce projects, leaving me with limited cash. However, did have a unique profile of credit and went and got more credit. So really used OPM, other people's money, to be able to really get into this project. And we're super excited about it. Really cool opportunity. It did okay, but it was more so about the journey and not the destination. And that's kind of walk away with from that.
Right. And so for the audience here, there's a couple things to just pause and notice, right? So for starters, he said he used OPM, other people's money, to actually move forward and actually buy a franchise. I know most people never think of the fact that you can buy a franchise and also do it with other people's money, because typically what's happening is they're pitching like senior people in their career because they know that they have a 401k or a Roth IRA that they can use as a down payment, in order to get the financing for that. But these guys basically got creative, went in what we term as credit card stacking. Would you agree with that term? You basically did credit card stacking, right?
card stacking, creative financing, all that jazz.
Yep, absolutely. So at 21 years old, he ended up opening a business, a bagel shop, utilizing creative financing. Now, a lot of our audience are people who are real estate investors, for example, that may want to start a tech company and things of that nature, or they want to scale their portfolio, they want to flip, or they want to buy their first creative finance deal. So now that you all see this, not only can you buy a property creative finance, but you can also buy commercial, I say property, a residential property, but you can also buy commercial, you can buy businesses and things of that nature. And at 21 years old, he figured it out. So that's really cool. Did you have any form of mentorship during this process, or was this just literally you taking action? And as they say, action breeds information.
Yeah, this was just pure overload of information that I would find and read on YouTube. I'd see on articles, everything. It was just, and honestly, a lot of it was trial and error. Probably should have found a mentor. Probably should have worked a little bit harder at, reading in between the lines and how some of this stuff worked, but so giddy and gung-ho, ready to go. I mean, did the most basic steps to get the capital, but just kind of unleashed it. And it ultimately turned into, a bigger snowball after those failed, which we'll get into the true trials and tribulations of one of those D's that you mentioned and how that became what we are today.
Absolutely. And then for a lot of the founders who are paying attention or would-be founders looking for their first thing, if you noticed, he didn't go looking for a problem. He solved his own problem first. He was customer number one. And what that did was him solving that one pain point for himself. He had insight to go find other people who have the same pain point. And then he was able to make a service around that, which the service started out as a service, and then now it became a tech company. So you can kind of see that iteration there and how it becomes this highly exitable, highly leverageable tech company. But started out as literally just an idea. It's just a 21-year-old who said, "Hey, I'm going to go start and start a franchise and buy a bagel shop, right? And then buy a second one." And this was all because he just took massive action. And so, yeah, absolutely good on you. Would you mind breaking down when we say the term credit card stacking for those who this is their first time hearing this? What exactly does that mean, and how would someone go about doing that?
Yeah, absolutely. So we work with over 300 companies now. So it's really just choosing any of these 300 plus, thousands of them on the market, I'm sure. However, effectively, what they will do for you and with you is if you're a business owner, you could be in any industry, real estate, restaurant, e-commerce, whatever the case. You will work with them. And if you're looking to obtain capital, lending products like a loan, SBA, credit cards, line of credit, you name it, they will help you get your file right, position your credit, make sure you have everything in line, and walk you into the banks, hold your hand on how to apply, what to put, everything of that nature, so you can go for the highest approvals. So for the credit card sub niche, what they will do is they'll, get your credit, if it's not already at a 720 plus, 740 plus, is to, get your credit there. And they will work with you and say, okay, what are your needs? What are your goals? How much are you trying to acquire? And effectively take you to, 3 or 4 or 5 banks maybe to start, and you'll apply for these credit cards simultaneously, right? After that, you might get some denials, but you'll get a few approvals, and combined have anywhere from 50 to 250K in 0% interest, because these are 0% interest APR cards, right? So you'll have multiple cards, and you effectively just spawned, 50 to 250K out of nowhere that you can effectively use to purchase something, to expand your business, to buy, an asset, reclassify debt, whatever the case may be. So it's really unique. And that's what these companies do. And they work with, thousands and thousands of business owners. A lot of them utilize our service, which is, the credit conversion, to be able to access one-for-one the liquidity from the cards. And we have unique partnerships and funnels built for every single one of these partners. And we just get, these business owners that are ready to invest into whatever the case may be.
And so now you mentioned a couple things. You all's platform now, Kashupay, a lot of these companies that help people access this capital or really access to credit, and then you all help them access the capital. Is this something that anyone could do, or do you need to, because as you mentioned, even if they don't have a good enough credit score, some of these companies actually will help you with credit repair or whatever the prep is necessary to get your profile fundable. Is this something that anyone can do, or do you have to come from a specific background, or is there any barriers to entry besides actually getting there and starting to work with these companies that we should be thinking about?
Sure. Yeah. So really anyone can do it. The beautiful part about our platform is, it's literally just a plug and play for those who want to send money to anyone, including themselves, from their credit card. So being able to, convert one for a one-time fee, no cash advance, no interest, anything like that. So really unique product, but you can come in, be any type for, if you're doing the credit card stacking, right? So those are just our clients now. Those are the people we work with now who have 30, 50, 80, 100, 300K in credit cards. The software is really going to leverage the average person who just wants to be able to rip $50, 100, 300, 1,000, $2,000 off of their card and sell it to their landlord or send it to someone, whatever the case may be. There's a million different reasons why someone, would need to access the liquidity off their card. And that's effectively the platform that we're going to instantly and securely provide for these people.
Okay. Now talking about Kashupay, and this is actually a good chance to transition from segment 1 to segment 2, which is the pain and the solution. And in this segment, we look at the different pains that we're seeing and what solutions that we're bringing to the market or bringing to the clients or the customers that is so valuable for them. So tell us a little bit. So let's zoom out a little bit and tell us about Kashupay, not necessarily an elevator pitch, but if someone who knew nothing about finance, nothing about credit cards, could you give us what would be like a quick synopsis of what exactly Kashupay does, even though we touched on it here and there?
Yeah, absolutely. So it's a complete platform, peer-to-peer payment app, just like Venmo, Zelle, or anything. You can actually attach to all these, and you can send people money instantly across the world to anyone from your credit card. So for that fact, it allows you to, take out however much percentage of your credit line into cash for whatever case that you may be. So that's the platform that we built.
Okay, that's clear now. There seems to be a lot of different ways you can apply something like this. The top 3 I think about, we just talked about real estate, right? So let's talk about the pain points there when it comes to buying property right now. Right now, interest rates are abysmal comparatively, right? In our young lives, people older than us will say, you guys think these interest rates are bad. Back in my day, they talk about like the 60s and 70s where interest rates were in double digits and things of that nature. So let's frame that for a little bit and just say, by the way, we know that this isn't historically high if you look at the whole longevity of America, but right now for us, this is very high. It's breaking business models left and right. Commercial properties, even in places like Texas, hot markets, have literally foreclosed over the last 3-4 years and gone to auction on the on the steps of a government building, basically, depending on where they're doing the auction and what county you're in and things of that nature. So now, let's say we talked about number 1. If I was someone who wanted to start a business or wanted to buy into a franchise, I could go get my credit correct if it's not already correct and go and utilize these services that will give us access to capital within the form of credit cards. Is that typically the first level of business credit that people have accessible? And that's why that's kind of like stop 1?
Yep, absolutely. Because it doesn't take any sort of cash flow or docs or anything like that. Because like some of these loans require you to have all these different financial documents that new business owners might not have. So credit cards, easy enough as an application. Just have good credit, a little bit of cash in the account, open bank account. Yeah, you're pretty much good for an approval. And that kind of ranges, right? So, contingent on a few factors. Immediately, the lowest hanging fruit is the credit cards.
And so a couple of things I think about. Number 1, you're able to purchase a business effectively or start a business. As a franchise, you're effectively buying into a business at the same time as starting a business, right? It's like a hybrid. So you're able to start a business from scratch, basically utilizing the credit cards as seed funding or like your seed money to leverage and get more capital for the business. So what did that look like for you all specifically? Did you take the credit card or the cash or the capital that you got from the credit card and then you went and got a bigger loan, or did you bootstrap from there? Or not bootstrap, but like walk us through that a little bit so someone who's new to this can practically understand what that process looks like.
Absolutely. So we worked with a consultant that made sure our credit was in top tier. They walked my partner in. So we had 2 separate businesses so we could get as much capital as possible. They walked us into JP Morgan Chase, Bank of America, US Bank, and American Express. So now 4 banks between 2 people. That's, 8 shots at getting cards. So effectively, we applied for 4 different cards each. We got approved, and we had somewhere in the neighborhood of 250 to 300K between us two. It varies with everyone. Some people alone can get 250K, others can't. Depends on factors. But my partner and I had about 300K, and that was our budget per se that we were going to use for these franchises. Right? We needed to buy equipment. We needed to pay payroll. We needed to hire all these different people. We needed to get a property, anything you could think of, inventory. A lot of the purchases that we had to do, had cash discounts, or the vendors only accepted ACH and wire. And how the heck, was that going to happen if we had only credit cards we wanted to use? We found ways to tap the liquidity, invoicing each other, buying stuff and returning stuff, whatever. It was very scrappy, but we ultimately got enough cash from the cards, to put a down payment on the property, to buy the inventory, and everything of that nature. So that was the process, and effectively bootstrapped it from there. So we got the 300K that we needed. Didn't use it for a loan, although you theoretically could. However, it worked for us. This is all we needed in this case, and we started with that effective seed capital. Because you could go raise 300K from investors or whatever, or you could have a good credit profile and take a whack at applying at half a dozen banks and get half a dozen cards, and now you have almost, if not all, the seed capital you need, and it's only you versus the world. You don't have to worry about anyone else.
Right. Yeah. And it's a good point to emphasize for those listening. The way that you all went about it, that $300,000, that was enough to get things going, buy the equipment, things of that nature, and to really get the business off the ground. However, for someone who's going into a more capital intensive situation, remember that 300K, you can utilize that as your 10% down payment to access what would be 10x that, right? So if you could use that 300K to get $3 million worth of funding. And now you're buying a $3 million business. A $3 million business is typically going to at least have some decent systems in place. And you're going to have a much higher chance of success when you buy a business that basically can trade for that amount, right? So even though this sounds like, like let's say you only can get $50,000, right? Remember that that's just a starting point for you to multiply the capital that you have access to. Right. And so that's why this is so powerful. And ultimately, if I'm not mistaken, Kashupay now is the conduit for people to do this in a seamless way. And now, there's an innumerable amount of use cases I can think of outside, even outside of real estate and outside of a bagel shop or this specific business. The world is your oyster effectively, right? If you can be creative, like the way that these guys at Kashupay did. And so it's something really important to point out. Now, doing this in the early days, so you started out with Kashupay and you really needed to kind of get in front of clients and talk to them and get an idea of how the niche functions. Can we talk about those early days and how you were able to go from, okay, so this is my issue that I was able to solve, but does this actually translate to something that everyone else will need? What did that look like for you guys in those early days?
Absolutely. We started, with that financial consultant. We were in a localized group of people who had gone through what we've gone through, right? They have the credit cards, they've done credit card stacking. So we found we were right next to our ICP the whole time. We talked about our story, and we were able to facilitate transactions on a small scale for this one group. Business owners left and right, down payment on this, purchasing that, expanding capital needs, whatever the case. And it started from there. And that was kind of like the little system that we had built for one group. We had, basic form collection, we had basic, payment processing, we had basic systems in place. We then were like, okay, well, how many groups are there? And we have since, built this out to, over the course of 18 months, to hundreds and hundreds of groups. But to get there, it was finding, a few dozen groups, or really half a dozen groups of, a lot of people that just got this creative financing solution. They have these cards, and they needed to access part of the liquidity. So it really started with this one group with our ICP right next to us. We solved their issue, and we're just like, okay, how many other people could we, solve this issue for? And lo and behold, this up and coming niche where people are using, their credit, the banks are promoting 0% interest cards. It can be, get more clients and users. And we're just kind of, this extension solution. So theoretically, as long as, banks are still giving people credit cards, which they always will, 0% or not, will always be around because, people want to access the capital and could be in a pinch, could be in a variety of situations to where they would need to access as little as, 25, $50 from a card or up to what we've seen is over 200K from their credit lines. So it's really dynamic and allows for anyone to do any amount they want.
Yeah, absolutely. And when you say groups, can we define that? So are we talking online groups? Are we talking meetups? Are we talking like masterminds, or what does that look like?
All the above. These are Facebook groups. These are credit stacking discords, communities, real estate groups, online, in-person, trade shows, anything where there's a dense location of people who might have a good credit portfolio. These are probably entrepreneurs. These are probably business owners at some level or just responsible consumers that have, again, a decent credit portfolio that are looking to, potentially use their cards in a fashion that might not be readily available. So they use us. I mean, not every purchase is treated the same. Some have cash discounts. Again, some people only accept ACH and wire, and we're going to, effectively have the all-encompassing solution to solve that at the safest, most efficient scale.
Absolutely. Okay. Yeah. So thinking about this, as you all can see as an audience, there's different ways to access who you're looking for. And typically speaking, when people have an issue, where do they go? They go right online and they look for the group of people who also have that issue. So whether it be a Discord group, a meetup in your local town, or whatever other type of a mastermind, whatever the case may be, there's probably a group, even if it's not around a specific solution. There's these groups that are literally just talking about the pain, right? Whether it be the pain of trauma, whether it be the pain of going bankrupt, or the pain of not being able to start a business due to a funding issue, whatever the case may be, right? And so that's why it's really important to get out there, get online, and really, essentially engage in fellowship so you can find those who have the same issues and you can synergize and find those solutions as well. So even as an entrepreneur, plugging into those circles, asking questions and things of that nature, then you can build that MVP of that solutions. You got into these groups, and initially things weren't really technology based, and you all were kind of doing things manually effectively.
Yep. Yeah. So it was super manual.
Okay, and that qualifies as an MVP. A lot of people think you need to have, some sort of software or whatever the case may be. And so a lot of entrepreneurs, they get hung up on this process and they go, well, let's spend all this time building this platform, when really what you could do is just go talk to the actual customer and then solve that issue manually and do that enough times to get the insight and then build a system and solution around that. And if I'm not mistaken, that's effectively what you did, if I'm not mistaken, right?
Yeah. Absolutely. It was limited on the analysis paralysis and just getting something out there. And within the first 90 days, we had done, a million in transactions. So it's like,
wow,
it was out there. It was out there. And that was just with this one group. And
wow.
Since then, it's multiplied tenfold and so on. But it's just a matter of getting out there and providing a solution and talking with your ICP. It was the effective way to,
Yeah, so a million in did you say first 30 days?
First 3 months.
First 3 months. Okay, so a million in the first 3 months. And then, so I guess we can look at this quarterly. So what did the quarters look like over the next, 4 quarters as with respect to growth?
Yeah, absolutely. So first 90 days, first 3 months, $1 million in total processing volume. That was from October to December of 2023. By March of 2024, we cracked $1 million a month. And by June, we cracked 3 million, August, 4 and 5 plus, and have just been rolling since then. Calendar year for 2024 was 50 plus on the books. And so far this quarter, 22 and change, off the rip. And we plan on, doubling that and hitting, 9 figures annually in just this sub niche of a sub niche at this almost manual level that we're at with some automations, but roll that into, a deeper software that will completely automate it and shotgun this wide to what'll be the United States and the UK to start here.
Okay. Awesome. Wow. That's congratulations on that progress. That's awesome. That's mind-blowing numbers. And so as everyone sees, it's definitely possible. And how old is the business?
Yeah, 18 months and change. So like now, a year and a half, a little over a year and a half.
A year and a half, and they've done over 50 million in transaction volume. That's wild. Awesome. So, okay, now this is where we transition to the next the next segment where we're going to talk about the future state, because as we know, things with respects to technology and with respects to culture, with respects to geopolitics, everything is just getting crazy. Right? Every single day, things get crazier and crazier. So we want to talk about how things are going to go in the future, what your thoughts are, and what the plan is for Kashupay. Now, we see that the last 18 months has gone exceptionally well is an understatement. So now where do you see things going? You said that the processes right now are still kind of manual, but what you're doing now is you're deploying more technology, more software, and going to make things to be more platform based. So tell us a little bit about what the roadmap looks like for that, and where do you think that's going to put you guys transaction volume wise?
Yeah, absolutely. So in this sub niche of a sub niche with these business credit funding companies, with real estate companies and everything like that, I think this alone will get us to 9 figures annually. So that's pretty cool. However, we're going to roll this into the complete MVP software wise, subject to later this year. And that's where things are going to get interesting. We're going to have direct integrations with other platforms. There's multiple, items that I'm sure people will take advantage of that previously don't have, credit card solutions. That being, investment platforms. That being, a variety of, crypto and forms like Coinbase and like Binance and everything like that. Where, there's a million different platforms and niches and markets that don't traditionally allow users to invest in with credit cards. You look at the multi-billion-dollar title industry. These title companies don't accept credit card as a down payment for a property. So effectively, we would take on all the risk and accept that credit card payment on behalf of all these different groups. So it broadens the scope and broadens the horizon of who all of these markets who their ICP is, because they now can market that they can now accept credit card solutions, right? So, and the cool thing about what we're building and the technology and the engine homegrown out here in Phoenix is it's going to be international off the rip. So we're going to be owning our own payments. We're going to be in our own system, doing our own things, and being able to supply a really good, a really safe, and a really unique solution for a lot of people, not only here, but across the world. So we're super jazzed about that. And, volume wise, we'll see. I, would love to see, a multi-billion dollars a year in transaction volume. I think that's 100% doable with some of the partners and some of the strategic, acquisitions and some of the verticals that we're going to dive into. I don't see why not. There's more people, facilitate credit card payments and debit card payments in the United States. 82% of adults in the United States have a credit card. So this is just going to be another tool at all these people's disposal to, add to their financial toolkit.
Yeah. Wow. That's really interesting. And what would you say are some of the more interesting use cases that you found or come across thus far, that even if it's something that you may not have thought about until you saw someone saying, hey, I want to use this to do this?
Yeah.
What are some of the more interesting ways to do that this can apply?
Yeah. Investing in your brokerage accounts, platform integration with your credit card.
Huh.
Buying, I like the whole property thing. If you can effectively put a down payment on an investment property or a home with a 0% APR card or a credit card to give yourself that much more runway, I love that a lot. I think it gives people the freedom, to choose how they want to pay something. And now they have more than one choice. That's the thing. It's always been debit. It's always been Zelle. It's always been an ACH or a wire, which no one likes to see cash directly come out of their bank account. But credit card balance, they can live with that. You're going to spend the money anyways. Whether it's cash leaving your account or cash to pay off the credit card balance. But if you can give yourself 2, 3 weeks, 4 weeks, 5 weeks head start on that payment, I don't see why not.
Yeah. So let me ask you a question here, because I have this it's an idea I'm working on, or it's not even really an idea. It's more or less a function or a project that I'm putting together. Not really for, because of hopes to building some sort of tech company, but more so because I see this problem in the market right now. And these are people that I actually know. I'm building a list of people who they own a property. These are, they have VA loans, mostly VA loans and some FHA loans and things of that nature, but they own property and they have 2.5% interest rates, 3% interest rates, and they're locked in effectively. So they can't sell their property for the value that they want to sell it, and they've already put it on the market, and the listing when expired, no offers on the property that were acceptable. But I also have this list of people who desperately want to buy a property, but they have good credit, but even good credit's getting 6.5, 7.5 to 7.5% interest on their loans right now for a mortgage.
Yep.
And so what I'm doing is building this list of both. And what I'd like to do is just marry them together. And what the terms end up looking like is the person who wants to buy said person's real estate, they're going to be buying it with respects to the in-place financing or subject to, but they're needing to have a 10 to 20%, not necessarily down payment, but with closing costs and everything, the down payment's a part of that. And so would this be a solution for, let's say, the buyers who need to come up with a 10 to 20% down payment for the property so they can buy that property from that seller, and then that seller is actually going to go on and do the same thing so they can keep their low interest rate as well? So it would be two people basically transacting and utilizing this type of solution. You can look at it like they're all swapping their houses essentially, and the mortgage is behind that. Is that something that would make sense for a scenario like this?
Yeah, absolutely. I mean, to be able to effectively spawn a 10, 20% down payment utilizing OPM. Yeah, that's one of the millions of use cases that people can do for it. And that's one of the use cases that people are doing it now. I mean, we see a lot of real estate investors, a lot of people putting down payments on properties with their cars. So, and that 0% interest gives them a runway. It gives them a runway, or the credit card just in general gives them a runway to figure what situation out they're in and then work it from there. But at least they have the property.
Yeah, so that's one example. So we talked about buying real estate, I mean, really even for you and your family. Now, of course, this is very B2B focused and is more investor focused. There are some regulations and things we just want to make sure that we keep in mind. I don't know if Dodd-Frank would come into this if you're planning on actually living in the property or in things, but keep that in mind when it comes to you being a residential person buying a property for yourself. But now, with that being said, if you're buying as an investor, there's a lot less red tape because you're a person utilizing your private funds to do this. And if you're doing this with another person, private funds, that's a private transaction. So the way that the American economy is built, it's built to really still give a degree of privacy and a degree of autonomy like this. So now you're not needing to go to this big bank to get money. You're not needing to go to this lender and pass every sniff test possible known to man. You now can go to the person that whether you know them or not, preferably if you have a relationship with them, because they are giving you a mortgage. They become the bank when they allow you to buy their property subject to or seller finance. And so we're giving people the opportunity to democratize these type transactions, because typically speaking, the only people who know about this are basically high level investors or people with a lot of experience, right? Even myself, I have 5+ years of experience, more than that, but I'll keep it at that for now. So making this more fair and equitable for the average person, now this total addressable market also becomes larger. And we're just talking about one niche that Kashupay is actually solving. So that's amazing. Now, coming back from an entrepreneurial perspective, we talked about the end users and the different use cases, but backing up a little bit, looking at things from a founder perspective, how are you thinking about things like moats, right? Like how to start your business, get it going. Of course, speed is one of the major components, right? Brand and speed. If you get those two things right there are some of the ways that you can protect your business, because if you outpace everyone, then you outpace them. So you don't really have anyone neck and neck with you. But what are some ways that you are looking at protecting your business, whether it be IP or whether it be market branding or whatever the case looks like?
Yeah. So level one is the controllables. Level one is the controllables, and that's how fast we move and the branding. Both very cool, very unique. We move very quick, as you can see by how fast we've scaled and how well we've done it. Level two is also going to be more so, the relationships and then the IP, right? And that's the hard part, is building those relationships with your suppliers or your vendors or your partners or whoever the case may be, to effectively give you, and I'm just going to speak in general from a broad sense from all industries, but give you the best pricing, exclusive access, just first class, treatment in that sense. And to do that, you got to have speed. You got to have good branding. You got to have, honestly, like a little bit of traction too, or you got to have the relationships. So it's coming from a a thing to, if you want to make a good moat, a really good moat, bare minimum is having a good brand and moving fast. The second part is just having your unique selling points. And in this case, our unique selling points is our IP and our relationships. And that's why we've been able to kind of really become this niche market leader and not really have any crazy competition, and just providing, a good service for people.
Right. In this case, would you say that you all created a category here? It almost like the blue ocean versus red ocean concept.
Absolutely.
Okay.
Absolutely. It was we'll call it maroon ocean, like right in between our purple ocean.
Yeah.
Yeah, sorry, I went to A&M. Sorry, Gig Maggies. A mix of a blue and a red. There was always people kind of doing this, but they were doing it wrong. Funds getting held, cards getting shut down, banks flagging this, that, and the other. So the people who were trying to do it, maybe they weren't honest with their payment processor. Maybe they weren't honest with their bank. Maybe, there was things that being done that couldn't be shared, whatever the case may be. So it kind of left a massive gap for, seemingly enough, just a sound solution that was safe and took care of people. And that's, what we've built, and we effectively, just double down on that blue ocean.
Now that you say that, I do remember, I can't remember if I actually utilized one of those type solutions for a property, but I remember I was considering it where they did something similar, but from what I found out, it wasn't really compliant. And like you said, they didn't even, like the banks and things weren't necessarily in agreement. And so that service, if I'm not mistaken, probably doesn't even exist anymore. But I know that by the time I was looking into using it, a lot of the things were basically blocked. Would you say the thing around that obviously is having those relationships, but it sounds like strategic partnerships became really integral in you all's process. Okay. So that's another really important thing. Not only are you serving the end user, but you're also creating these strategic partnerships that allow you to have the infrastructure and the processes, but also with the strategic partnerships, and you're creating channels as well, right? Because obviously they have customers that probably can benefit from a referral basis from your actual platform. Am I mistaken in that statement?
Yeah. That's, the whole thing from it, right? Is being able to give them incentives. Because right now, how the whole process works is we will go to these companies, and these are already solutions that they're trying to find for their clients, for their networks and everything. So we come to them and say, hey, this solution is completely done for you, integrated into your system, and it's an upsell, cross-sell for your current clients, your current people. And, you make a percentage on volume that you send. So it's an absolute no-brainer because it doesn't cost anything. And we do all the work and all the heavy lifting for all these 300 firms. Just the fulfillment solution.
Awesome. Now, that's pretty cool. Now, developing relationships is obviously a super important part of the customer acquisition process, but also the strategic partnership process. And one of the main ways, or more clear and direct ways of developing relationships, is basically bringing value and leading with value. Do you all kind of share a similar mentality as, let's say, Alex Hormozi, where he says you should give as much away for free, as much sauce away, as much info, as much value away free intellectually, I'll say, to where, and then what happens is people feel obligated to come back and pay you for something, right? Do you, some people use lead magnets and things of that nature, but there's so many ways to impart this value. Do you all do anything like that with respects to giving value up front and that being a way to actually get customers?
Yeah. So our form of value is giving relationships, giving people connections and, handshakes that they need to maybe solve a problem, or to maybe make their business better, or to maybe make more money, or to maybe promote something that they're offering. So what we've done is we've cultivated a unique community and cultivated a really cool group of people to where if someone needs something, if someone needs a solution, if someone is looking for fulfillment or looking for, a platform or anything, we are fortunately in this cool spot to where we have this Rolodex of kind of all these different servicers that we work with directly at the C-suite level, and we just make intros all the time. It's literally just a battle of, who can we make the most intros with to who, and the ROI has been tremendous. The ROI has been insane. So,
Okay,
yeah.
So let's break this down a little bit for the audience, because we have literally PE guys and VC guys and things like that, but then we also have like my first swing in entrepreneur here on the podcast, and we want to make sure that we speak to all of them. Now, so you're getting you guys are doing intros that are in the best interests of the C-suite in that company, whether it be to customers, whether it be to other strategic partners, or whatever the value set is. And that obviously you get reciprocity there. That's kind of how you're opening those relationships up, if I'm not mistaken. And then on the other hand, with respects to the actual clients that the people actually utilizing your platform for liquidity, how are they typically getting involved, becoming educated, and how are they hearing about things?
Yeah. So it's kind of all within the network.
Okay.
Word of mouth is the strongest form of marketing, and being able to supply and fulfill tens of millions of dollars worth of client value speaks volume.
Yeah.
Especially in a place where this is a notorious solution where a lot could go wrong. It could be really, tricky to be able to, help people out and being able to help out this many people doing this much volume. People are willing to talk about it, especially when they get paid. So it's kind of a win-win.
Yeah, absolutely. And one thing that I would say there's some wisdom from a lot of exited founders who say, if you have the ability to launch via a platform or via strategic partners, one thing I think of, like WAP, for example, that company with like a lot of clippers and things like that. They have a lot of different use cases, but one of the big ones is marketing and clippers and things of that nature. What are your thoughts on launching a business through like a platform like WAP for people who are in other tech verticals? You could think of launching through like Salesforce, for example, putting your app on Salesforce or in the HubSpot app store, or whether it be the Apple app store, things of that nature. What are your thoughts on launching through a platform like that, at least initially in your business?
Yeah, I'm all for, diversified marketing streams and being able to utilize these platforms that have some of these clipping campaigns that have all these already users on their platform. It's a no-brainer, especially when it doesn't cost you to do anything, right? So being able to diversify and having a team that is willing to understand what true diversification means and willing to build something like that can be on all these different platforms, whether you got to tweak a product, whether you got to, make it make sense for that specific platform. That's where kind of the team aspect comes in, and having people who are malleable and are in variable spots to be able to craft and build something and answer kind of any question per se.
Right. And so talking about the channel and things of that nature, strategic partners, client acquisition, we kind of went over, word of mouth being the most powerful way of client acquisition, because your cost is almost nil effectively, right? Are you all doing any sort of referral partner programs, or is it just literally the word of mouth is just all reciprocity?
Yeah, I mean, it's a little bit of both, right? So we do a lot of word of mouth, and then we do a lot of referral partners, right? So these referral partners, they're in networks with other people who do what they do. So they commissions off of, their network and their friends and their colleagues. So it's a really unique scenario to get people to, refer their networks, and then they refer their network, and then they refer their network. And though it's not like a multi-level thing, it's just a way to get deeper into these needs.
Yeah, absolutely. And now having the right word of mouth and things of that nature, this is clearly because it's a good service and there's a starving crowd, as they say that, and you're bringing a solution to a starving crowd. Now, going backwards a little bit, and to get there in the first place, you have a background where you went to school for engineering, but you're also a commercial founder as well, right? Like you can sell and you can do the business aspect of things as well, which is rare. But even still, you typically want to have a co-founder. If I'm not mistaken, you have co-founders as well. That's one of the things, a big point of contention for a lot of people, where they don't really know the first thing about finding co-founders and finding the right partners, finding the right, in some cases, investors to become on the board. Number one, thus far, it's been all bootstrap, right? Has any investment at all gone into you all at all? Not a time. Awesome.
Yeah, all bootstrap.
That's awesome. And so getting the right partners and getting the right co-founders, what did that look like for you? Was your co-founders people who you grew up with and you knew before, or did you meet them at a meetup or in college, or what did that look like?
So this is the part where I would say luck came into play. Okay. Being able to resonate with people who are like-minded, but also kind of your opposite. I think in my professional opinion, in order for a successful partnership to work, like there's two co-founders, it's got to be a yin and yang. I said this on another podcast a couple of weeks ago. It's got to be a yin and yang. You got to have, if you have two marketers trying to start a market company, they're going to probably butt heads. If you got two, sweaty engineers that are starting an engineering company, they're probably going to butt heads. But in our case, if you have a, operations and finance guy and then a sales and systems guy, that's, that's yin and yang in our book, right? So I know that he's in his room and I don't have to worry about his mess because, I'm not asking about it, and vice versa. So it's being able to, find a yang per se to your yang. And this happened to be through a mutual friend who's actually also working with us. So we got a couple of our team members who, we've known for a while, since childhood. And the rest came from friends of friends. So obviously, there's the rule of like, don't do business with your friends. But I mean, I think there's a lot of cases where if you can have those unfiltered conversations and that true dialogue and compartmentalize business and, personal friendship, you can still work with friends, right? You got a couple of buddies from, my college that are with us. You got a couple of buddies who have done previous projects that are with us. You got, one friend that I've known since second grade. He's with us and everyone loves it. We're all hacking away. So it's really kind of a mix. I think regardless is to be a good judge of character, is to feel it in your gut to determine why people are here, why people are doing it, and where do they see it? Where do they see it going? Do they have aligned vision? So they're just here to ride the wave. Otherwise, there's no point in having them. With all due respect, everyone has to be aligned, especially at the startup level. And, finding those people is part luck, but also kind of part the ability to read people. I think it's something that comes from just history.
Yeah. And a few things you said, it really gives clarity to some of the decisions that other organizations make that are well known. For example, YC, Y Combinator, they won't invest in or have anyone in the program that's a solo founder, right? And as a matter of fact, they really look for that, like you said, that yin and yang. They look for 3 founders, but then they have admitted 2 founders before. But the entire premise is you have people with different skill sets, and in this way there's more synergy, and then also each person has that laser focus on what their wheelhouse actually is. That's where you get the expertise really growing rapidly, when people can laser focus like that. Now, for someone who's looking for their first partners and things of that nature, what would you say as advice in order for someone to find that right person, whether it be increasing their surface area and getting involved in organizations, or whether it be doing content? What would your word of advice be to someone?
Yeah, I definitely think you'll probably have to be a little bit social, and it might not even have to be a huge amount of social work. Be in places where you think you would want to find your ICP as a co-founder, right? So if you're a tech guy and you're looking for someone who's technologically strong but can also sell and pitch, go to those places where you think you can find, those kind of people. And honestly, that may be working at a startup. A lot of people, there's so many stories where they go start at a startup, where they're working at a company, and they effectively, end up meeting their co-founder at that company, and they branch off. So yeah, I would start off with something like that. That would be a really, good way to not only meet people and find people that you're looking to potentially collaborate with, but if you're at a startup that is in the relative niche that you want to, explore and build, that's 2 birds with 1 stone. You're getting history. You're learning how the market works in whatever niche you're in. You're probably making connections, and lo and behold, you might make the connection to find your future co-founder.
Yeah, that's really good advice. As a matter of fact, it reminds me of one of our last guests. He was one of the co-founders of Pi, the Portland Incubator Experiment, and they're what they call the Pi Cookbook, right? They have so many puns on it, but it's the basic structure and all the components needed to create an incubator for startups. Like the one in London, for example, literally used their playbook to create the one in London. And that's exactly what, literally everything you said was what we talked about. And so those are some really good lessons there. Now, do you feel like it's kind of hard to forecast where things go that early? Do you feel like it's really important to kind of understand where that person wants to be 5-10 years from now? Or is it more or less, okay, what are our goals right now? And like they say, the near rocks versus the far rocks that we need to cross. Do you feel like that you all need to be thinking about, okay, what are our goals with respects to exit or any of that? Or is it like, hey, the things that need to happen right now and in the next year is the only things that are important, at least at this point?
I would focus more on the near. That's Personally, what has worked for us, it's a good idea to have an indicator in who you're working with on the relative scale, where they want to go in 5, 10 years. So that's also an indicator, but I would focus more on the near. If I had to take a percentage basis, 70% on the near, 30% on the far, you know that someone is dreaming at least a little bit on the far side, but still focused on the now, because that's what matters in my opinion. Being able to execute and build and start on something now, and now is, 12 months, but having a healthy balance and finding someone that, is, that 70-30%. Or you could have someone who's maybe, you've connected with and they're pretty much 90% on the future and you're 90% now. Though it might bring up a lot of discrepancies, it might work for a blended relationship of, someone who works really hard on the business and then someone who works really hard in the business. Like you have a visionary and then you have the engineer who can execute on the visionaries, ideas. So there's also kind of that side to the coin too. It just all kind of comes down to, who you are, where you're at, who you're meeting, and what your goals are and what niche you're trying to explore.
Right. Absolutely. And then also you said something that really resonates. And it's also a part of the mission of this podcast, right? The podcast is about the founders, of course, right? They're the central player in all this, but we really want to emphasize that it's not just about the founder. The founder is not the only single ingredient that makes these things work. And there's this whole ecosystem of people around it, people who have marketing backgrounds, people who have sales backgrounds, some people who can code, people who know AI, not people who know how to apply AI, people who know how to get ROI out of these solutions and translate that to an enterprise actual set of value, right? Or a use case. So it's really important to pause for a moment and remember, you don't literally need to go out and right now be a founder. You can just go and join a startup and go and serve a founder, because guess what? There's no better education on the planet, no matter what anybody says, better than getting actual experience in the current moment for you to have real expertise that can actually work next time around. Is that a statement that you would agree with?
Yeah, absolutely. Everyone's situation is different wherever you are, wherever you're going, and what you're trying to explore and build. It's all situational. So leave it as an open table for wherever it might take you, because, you keep applying pressure, you keep following the steps that you think is right to get to where you want to go.
You'll get there, right? Yeah. And so tell us a little bit about your team, the people that work around you, and kind of like whether you want to name them by name or if you just want to say their roles, kind of how they fit into what you all are doing and kind of how they came along and joined the organization.
Absolutely. So my partner and I started this, the first operations guy that came on was that friend I've known since second grade. He's been hacking away. Everyone's been doing 10 to 12-hour days for the last year. Since then, we brought on 4 more people on the front end, and these are people who are working directly with the business owners, and these are folks who are on the ground, shaking effectively the business owners' hands via phone to understand who they are, what they're trying to do, and how much they're trying to process, right? So those are kind of the needle movers that we really have on client-facing side, but it also comes down to the tech and the technical operations, the IT side on the back end, right? So I'm an engineer. We have a really good team of girls on the IT that do everything, solve problems quick, and that has been a real blessing. So meeting those people, all walks, but they've kind of all been intros of friends, friends of friends, everything like that. And then we have our partnership team. Those are the people who are scouting more of these credit groups, real estate guys, and they have their own system. So it's like you have these effective 3 different apartments from the front end to the partner end to the back end technical. And these are all people who, like what they do, who are really good at this specific skill and provide immense value and do some really cool things. And the main thing is, we all have the synergy together, and we have built out an amazing system to problem solve really quick and be able to address issues and get stuff done, have efficient conversations and everything. So that's kind of contingent on the people that you bring on. And these have all been, friends of friends, and it's a really unique, dynamic web that we built. And these are, again, team is everything. And that's why I say you got to be able to vet, you got to be able to know where people's hearts are at. And, if you could fortunately have a few stars align, you could get yourself a good team to launch and run a good product.
Yeah, and one thing I noticed you said a few things that seem like golden nuggets. In this podcast, we like to basically pull out what we call golden nuggets, right? We try to go for three in each episode. And from my impression of you and your business and how things have grown, number one, speed to value seems to be one of the golden nuggets that I think would be what you would say has been a part of your success. But would you say that you have three different golden nuggets that would be the most critical things, or if someone said, these are the three things that made us successful in this business, what would those three things be?
First, I would say being able to, read people and understand where they're coming from. That's the first one. As a founder, you have, like I said, team members that you're trying to bring on and read people. And then also on the customer side, people are coming to you. You have to understand where they're coming from, why they're coming to you. So, that's kind of the first part. The second part is being able to take, criticism and be able to take learning lessons and actually apply them. Like actually apply them. Don't, sit there and say, I can understand criticism, but to understand it is different than to apply it. So I would say that, because that effectively allows you to craft a better product, because you're getting criticism from, your team. You're getting constructive criticism from your clients, your network, and everything to make it better. So to do that is incredible. And honestly, the third one is compartmentalizing and being able to, all encompass and wrap everything up into knowing that business and personal, and this is for those who are in business with friends, right? Business and personal should be kept different, right? Otherwise, relationships could potentially, go south per se. So I would say it's all about, reading and understanding, taking the the constructive criticism that you get, and then being able to diversify those thought bubbles based on one or two. So those are kind of, in my opinion, there's probably a couple more I could sprinkle in there, but I think those are the biggest winning items that allow you to craft a really good team that is able to have really good dialogue to effectively solve problems, and know that if there's something that needs to be fixed or talked about or chatted with, whether it's good or bad, people know that, you're leaving it at the door. You're leaving it at the door. It's not, a judgment of who you are character wise, but it's a matter of, we need to solve this problem. It might not be pretty. How do we solve it in the most efficient manner possible? And that's kind of, those three things breed for that ecosystem.
Yeah, absolutely. And the first one you mentioned, really understanding the person and their motivation and their why, right?
Mm-hmm.
Just being able to analyze that and being able to keep that in mind. And it seems like there is a requirement of a degree of empathy if you really want to be good at that. What are your thoughts on that statement?
Yeah, I think there's definitely some, you need to empathize, but there also needs to be like the other side, and know that, yeah, no, I would say you definitely need to empathize and understand, and use that as a means of getting to a solution.
Mhm.
I'm more of a logical person. I'm a logical brain, and less emotion.
Mhm.
So I'll logically empathize with folks, and I leave my emotion at the door to just cut to this, to the fastest, easiest solution, well, the best solution possible.
Right. Right. And then another thing you really mentioned is efficiency. How do you go about making sure that your organization and your communication and your interactions with everyone is efficient, so there's not this multitude of wasted meetings and things like that they do in like corporate America effectively? If it wasn't for tech, that's been scaled back a lot, but that's mostly because of tech people, right? Showing that they can get more done with less. And so how do you keep, do you have frameworks, or how do you keep that going in a scalable way?
Yeah, frameworks, SOPs, and leading by example. You can't say people that, you can't say to your team that, we're going to be efficient and, do X, Y, and Z if you're deliberately not doing that. So it's being the action behind your words that really push your team. And honestly, it's kind of inspiring, right? So if you can find a way to inspire your team, they will be able to kind of conform to the best ways that make this operation run. And if you show and prove that you're efficient, people are going to, for lack of better terms, fall in line.
Right.
We all work together, though we're all on one field. If they look to you for a solution and you're efficiently solving solutions, and you explain this is how I efficiently solved it, you do that enough times with enough things, and then you wrap that into SOPs and procedures. It's a no-brainer. And that's kind of the reading people, is being able to read the people before they even join you. Are they going to be able to even fall in line and conform in the sense of efficiency? Like, or are they just going to, be stuck written in their way that maybe slows things down? So
Yeah.
that's kind of, it's a
Yeah, makes sense. Absolutely. Awesome. All right. So now we're transitioning to our fourth and final segment. We call it the 5-minute flow state. And so what that actually means is it's a little bit of an opportunity to let our hair down. We'll talk about things that are a little bit more personal. But at the end of the day, this is about ending the podcast and having a good time on our way out. So first and foremost, as we jump in, you talked about leadership in our last question there. Could you tell me, number one, you, as someone who was a former military officer and has extensive amounts of leadership training, I can see from afar that you are a good leader. Do you feel like this has been an innate thing, or have you gone to leadership training, or has there been someone in your life that has been like the beacon that you said, if I can be like this person and I can emulate what they're doing, I know that I'll at least be a decent leader, and if not, a great leader?
Yeah, so it kind of all stemmed from taking action, and taking action in general, taking action quick, I think kind of automatically, puts you in a potential leadership category. So I'd always been in organizations and everything, and, organizations in college. It's seemingly enough, all you had to do was take action and move the boat and lead, spearhead, a bunch of small things. And that would, effectively be leadership. And I kind of learned this, from my late father who passed away a couple of years ago.
Sorry to hear that.
Thank you. He had a PhD in psychology, so would just kind of run me on these mental mind maps all throughout my childhood, which allowed me to learn how to talk to people, how to assess situations, and, learn how to solve, kind of these two things, right? So being able to learn, build, and solve at a personal level, and then commercial level per se, and ask the right questions, mix that in with the ability to execute, and seemingly enough, that's what the solution to leadership is, in my opinion.
Yeah, absolutely. And on that note, do you have like to recommend for the person who's behind you and wanting to start a business, whether it be a tech company or anything else? Do you have specific frameworks that you would say, I live and die by this specific framework, or anything of that nature? Or do you feel like your life is more of a collage of different frameworks?
It's for sure a collage.
Okay.
Some people are like, you shouldn't, hack away and borderline slave away on your operation. But, I personally enjoy working 8, 10, 12-hour days. I mean, at least right now, right? So, it's a multitude of frameworks, from the deliverability level to the personal and relationship level, and then to the execution, kind of to all encompass that. So it's a mix of, it's going to take trial and error to figure out what exactly those niches mean to you. I would just say that, you kind of have to dive in head first. I mean, dive in head first and, build your own formulation, whether you stick by one or stick by the other, whatever the case may be. Me personally, blended, all day blended.
Got it. Right. Yeah. And when you have a blended, there's something that's not really talked about much, but when you have the ability to blend frameworks, that means you have a deep understanding of that framework as well. So for people who are lesser experienced, start out by getting a few frameworks, trying them out, actually keeping track of the results from those, and then say, okay, so this works for me. Eventually you'll find what's congruent with your person, and what has a continuity to where you show up and people know that framework and that way of acting is you, and not basically you doing something robotic without understanding even what the impacts of it are. So very good stuff there. Now, one thing I do want to ask about, I noticed you said that your father died 2 years ago and your business is only 18 months old. So you went through a pretty tough time right when you were starting a business. How did you get through that? Was it faith, a spirituality? Was it family? How were you able to go through something as traumatic as your dad dying, and then turn around within 6 months, you launched one of the fastest growing businesses in the world?
Yeah. So it was a mixture of faith, family, and delusional optimism. I was wrapping up my college degree. I'd already lost money from the e-commerce And then we ultimately lost an exponential amount of more and was in debt from the real estate properties. We put it all on credit cards. Imagine if a project doesn't work out. That's what happens, which is the inherent risk. And that's okay. We knew that going in. At the height of that, I was taking care of my father, who became fatally ill with pancreatic cancer. And I also neglected my school. I was on the verge of being kicked out from engineering school at the second to last semester. Businesses was failed. Debt was high. The only thing that was working was this model that my partner was doing, the credit conversion. Seemingly enough, fortunately I asked him to say, hey, can I help? How can I help? Can I use my systems knowledge? Can I use my potential degree to help build a solution and everything about that? And that's when we, put a label on it, ran it together, put a couple systems on it. And that kind of numbed, the time while everything was happening, but it kind of steered me on track. So I would honestly say the delusional optimism played more of a part than the faith in the family, but the delusional optimism steered me on track to focus back up on business, to give me the courage to focus on school, to then graduate, because that's what my father wanted me to do, and ultimately doubled down on these items and put all of that emotion to something that could have an ROI. And that's exactly what was done. Yeah. Hell of a story. The 3Ds you said, I mean, it was like, what? Debt,
death, and depression.
Death and depression. Yeah. Kind of seemingly enough qualified for all three, though. Wow. Depression is to each their own. I found my solution. I found my solution in working and solving and kind of locking myself in, to make this work. So bare minimum, at least had two. Some would say you can argue you had three.
Yeah.
But main thing is to come out on top and know that, there's people riding on you, and for your rock, which was, my father, to say, hey, you need to get this done. Like, follow his kind of steps, because he was always an action taker, PhD at the same school I went to. You kind of have to keep it going. You can't let the torch die. So that's something internal that only you can learn. And heaven forbid you go through a situation like that. Just know that, and this term was from him, this too shall pass. And just know that everything comes and goes, and how you feel and what you're going through and what you're building is all a blip in time.
Right. So it seems like you took the emotions and the experience and you made those things your jet fuel, essentially, right, to power you through these things. And also what I see is it seems like your business became your therapy.
Correct.
It seems like,
oddly enough, you might say it's unhealthy, but no.
Yeah, entrepreneur to entrepreneur. Of course, we're like, yeah, good job, but
outside world, that's unhealthy.
Yeah, but then on the other hand, a psychologist would say, guys, that's not necessarily at least how you should always do it. So yeah, good on you being able to come out the other side of that. And I'm sure even there's no coming out the other side of a death of a parent, right? Like those are things that they say it really doesn't get any better. It's just, you just learn to deal with it, right? So yeah, very impressive that you were able to have that, again, grit. As I said, your avatar for me is you're the Phoenix, right? When your last business failed, you all utilized debt for that. How far in debt were you all at the time? And this was when you were starting the next business, right?
Yeah. Yep.
Wow.
We were about 300K in the hole. I graduated and walked my stage with 300K in debt. I used student loans to help throw down on the business, but 250 plus of that was straight credit cards, and that is enough to make someone jump off a bridge, in my opinion. And,
absolutely.
It's kind of the thing where you almost have to swallow your pride. And on the outside, people still think you're kind of putting up all these numbers on the scoreboard. You've done all these businesses, you pivoted, but from the outside looking in, people don't really know why you pivot. They can only the people who understand realize that, okay, well, you pivoted because something didn't work. Right. From the outside, everyone's like, oh, you pivoted because you added something else, because you have so much money and you have so much success that you've added. And let me the exact opposite. And I walked the stage with probably more debt than, any other person who walked that stage. And, that was kind of that thing. That was crazy.
Yeah. Wow. What an interesting story. And this brings me to a point, like you said, that's enough to make someone literally jump off a bridge at that moment. Right. So I won't harp on that. But also in entrepreneurship, it's many cases, like your business exploded, right? But then you had that time before that everyone seems to have, where you have that super low point, and it's really about this too shall pass. Get through that time. And one thing I want to point out is I do have an acquaintance who there went pretty far in debt as well, and one of the partners eventually committed suicide over the situation. And you want to hear something crazy? After he committed suicide, they found out that there was something that was like either illegal or against policy or something with respects to their debt. And within a few months, all of it was forgiven. And one of the guys committed suicide.
It's never worth it, man.
Yeah, and so if anyone's listening right now and you're going through that depression and that moment, I mean, look at our guest today. Look at how he went through that, and now he has one of the fastest growing businesses in the world, and one of the businesses that's going to help so many entrepreneurs. It's going to change so many lives. Right now, we're just finding the different use cases for this, but imagine all the people who, when we come back 10 years from now, if it wasn't for literally this conversation, if it wasn't literally for Kashupay, and if it literally wasn't for him, they would never have their business. They would never have turned their life around. So keep that in mind. You don't know what's next. You don't know what's coming around the corner. And so just keep the faith, keep pushing. And back to what he said earlier, one foot in front of the other. Do not stop. So, all right. So to kind of transition a little bit to a more upbeat note, thank you so much for being vulnerable and talking about your story like that. This is the stuff that people don't get enough of, and they need this type of fuel to get them to the other side of that trough that they're going through, especially as entrepreneurship is lonely in most cases, right?
Very.
So thank you for that. Now, going back a little bit, keeping it a little bit lighter, what would you say, are you consuming any sort of content? Do you have a favorite book or a favorite podcast that you look at that you think is good for you at this phase or has been good in the past?
Is it bad that I don't really have anything like that? Like, I mean, I have a list of books on the shelf right here. I mean, Good to Great, One Simple Idea, Blue Ocean Strategy, the basics
Right.
per se.
Mm-hmm.
It's maybe like reading articles, but not necessarily a podcast, not necessarily, anything like that. It's just kind of action, man.
Yeah, there you go.
The action.
Right. Yeah, I love that because so to distill his point, you can read books, you can go to masterminds, you can go to a guru or a coach or whatever it is, you can get information, but always remember at the end of the day, massive action gives massive information. So taking action was his book of knowledge moving forward. And he's a product of that basically. Now, okay, next question. What would you say is probably the most understood thing about business and entrepreneurship that you've encountered?
Most understood.
Misunderstood. Like a myth buster type thing, or a myth that people said before and then you found it to be completely inaccurate because the people who said that were people who didn't start businesses.
Misunderstood that it's like, just because you're doing a lot of volume and you're doing, you got a lot more money, more problems. More money, more problems. I would say, when people think that they scale, you get to this like holy grace land, you're doing, all this money a month and it just works out well. But know that, the problems multiply as they grow. So be ready to solve bigger problems if you're going for bigger fish. It's, that's how I'd say it. Otherwise, if you're content and happy with a level, that is totally okay. But if you're looking to be a delusional optimist and take it to the next level, there's always going to be something you got to fix. And the bigger you want to go, the bigger the problems you're trying to solve, the bigger problems you're going to have.
There you go. I love that. Yeah. So to prepare yourselves, remember, as he said, the bigger the solution, the bigger the problem. But on the other side, the bigger the money opportunity typically is, right? Because you're solving such a big issue there. Awesome. Okay. Now, next question. We're going to go a little bit faster as we wrap this up. It's a little bit more rapid fire, but we're coming to the end here. If you had to pick another career entirely or another business outside of fintech, what would it be?
Get back into real estate. I would do it. I mean, it's I think, most millionaires are made in real estate. Something, that would be cool. Maybe dream like something along the lines of, CPG products and get back into e-commerce. That would be kind of cool. Okay. So it really kind of depends, but yeah, I would definitely go back to my roots, the place that, caused me harm, financial harm. And I would take another stab knowing what I know now, and be able to try to hit a home run.
Yeah, absolutely. And it's something to point out because this is something that's misunderstood. And you could even look at this as an investor where people always hear about the founders who started a business and it went to whatever high MRR or ARR and then it exploded. And they're like, that founder's a failure. And then they hear 6 months later, that person tripled the amount of money they raised the first time around. And it's just baffling to people. But it's important to understand that even in those failures, investors and people who are experienced knows that you're now more experienced. And so they're willing to bet on the person who got this far and learned lessons over someone who didn't even fail, essentially. So a failure is not to be looked at as a negative thing, right? As long as you get the lessons from those failures and you're literally a product of that. And so that makes total sense. And you get it why you would still consider going into real estate. So for all those that are listening, if you don't take that failure as feedback that you shouldn't still keep going forward, it's feedback that you should learn the lesson. All right. And so, did you have anything else to add to that?
That's it for me. I mean, this kind of covers everything.
Yeah. And so for our last and final question, if you could give yourself, your younger self, one word of advice or one sentence of advice, what would it be?
Credit cards are not your money. Credit cards are not your money. I would, take a holistic approach to risk and to building something and enjoy the time that you have with the people around you, because that too shall pass and everything is temporary.
Yeah, very wise words from a young man. So yeah, you definitely are wise beyond your years, obviously successful beyond your years as well. And so that is our last and final question. I want to just say thank you for joining us today. And to everyone else, all the viewers, remember to like and subscribe so you'll be the first to know the next time an episode goes live. This completes the Founders Talk episode with the 5-Minute Startup. Boom. Awesome.